Good morning, everybody. Welcome to another day. Market Report brought to you by Mike Bjork. Today is Monday, June 27th. Hey, only one economic item on the docket here today, and it is the market PMI services. This is kind of an index that kind of gauges the service industry instead of just the manufacturing. We have another one for services. And anything above 50 is considered expansion. So as you can see, we had 51.3 back in May, and it stayed the same in June. So there's no movement in from one month to the next here. Headline news, stock market's way down again. So the Dow closed down about 611 on Friday, and right now they're currently down over 300 so far this morning. So we could feasibly think that the Dow could close down 1,000 points over the last 2 days, all due to the Brexit vote on Friday. So what's going on is money's coming out of those markets because everybody's panicking, equity markets, putting it into safe havens like gold, mortgage-backed securities, to buying in yen currency to the U.S. dollar. And because the U.S. dollar is getting stronger, this is why the oil prices are going down, as oil is pegged to the U.S. dollar here. That's the reason why the strength of the dollar is weakening the cost per oil for us. So big news there. So a lot of people have been pretty caught off guard, especially after a lot of the polls were kind of showing that they're going to remain, and it's still kind of having its after effect. Now, I do anticipate this probably going on for a while. As you recall, we've seen similar instances when Greece was possibly leaving, and this is a much bigger scale than the Greece situation, as Greece was basically having financial troubles and having trouble staying afloat, whereas Great Britain's a great supporter of the EU, one of the largest financial districts in Europe, possibly even the world. So it's definitely a big loss for the European Union for them. Bond market, here's where we left on Friday. So we still close up about 50 basis points higher from where we started the day on Thursday, or we left the day on Thursday. So we had a nice little clear cut here. We did lose, obviously, for the day, because we would have started way up here, and we came down here, pulled back quite a bit. So it was about 50 basis points, really what we the final day was. So it's still good for good pricing. That's translates to a half a point better in your fees. And right now, from here to here is about 34 basis points. So again, we got improvement in our pricing so far this morning as a result of the stock markets pulling out and more investors putting more into the bond market, which is helping us out here. Usually, typically, these could close up pretty quickly, these opening gaps, but in this situation, because the scenario is pretty drastic, I think we could see our path up here for a while. Basically, most people are saying that Fed won't be raising rates in July, and a very good chance that it won't raise rates at all this year as a result of the Brexit results and stuff. So this is something that's going to probably linger for quite a while here. And then of course you got some people who think that economists have been projecting economic recession even for the U.S. here in the next 12 months. So this is something that could potentially push us into that recession if we go that direction. So it'll be difficult to very difficult to go into it, but very difficult to steer clear of it, especially with everything going on around the world and how intertwined we are. So something to definitely keep an eye open for. All right, folks, you guys have a great day. We got better rates today, and we'll see you guys tomorrow. Thanks for watching. Bye-bye.